Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 mega cap strong buy dividend stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at 3 mega cap stocks, so with market caps over $200 billion that all pay out a solid dividend and also have a strong buy consensus from Wall Street. We're going to take a look at these companies, what it is that they do, and what those analysts are predicting for the stock's future. We found today's companies using the TipRanks Stock Screener. Found right under Research Tools with the stock screener, we're looking for a strong buy analyst consensus, a high or very high dividend yield, and a mega market cap. And that brought our list just down to 3 stocks. And just before we get into today's 3 companies, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel. You can also download the TipRanks mobile app to access all of your favorite investment research tools on the go by following the links in the description down below. Now let's get right into our 3 strong buy mega cap dividend stocks. First up, we're taking a look at AbbVie. They trade under the ticker ABBV, currently priced at $172. In the past year, their stock has climbed over 25%, and in the last 3 months is up about 3.5%. AbbVie is a biopharmaceutical company that discovers, develops, manufactures, and sells drugs to treat complex and chronic diseases. They focus on therapeutic areas where they have expertise and the potential to improve disease management, including oncology, immunology, neuroscience, eye care, and aesthetics. Their primary product is Humira, which is an injectable drug used to treat autoimmune diseases like rheumatoid arthritis, Crohn's disease, plaque psoriasis, and ulcerative colitis. In 2023, Humira accounted for 27% of their total revenues, which were $14 billion. AbbVie is a dividend king with dividend payments and increases dating back 52 consecutive years. Their current quarterly dividend is $1.55 for a dividend yield of 3.52% and a payout ratio just shy of 56%. They'll be sharing their Q2 earnings report in just a couple of days on July 24th, and this does follow a Q1 earnings beat back at the end of April. For their Q2, analysts are anticipating earnings per share of $2.70, which is a slight decrease from last year. This follows their Q1 earnings per share of $2.31, which beat estimates by 5 cents per share, and net revenues of $12.31 billion, which did grow 0.7% year over year. One of the most recent analyst ratings just came a couple of days ago at the end of last week from BMO Capital. They increased their price target of the stock to a new street high. They said the firm's review of the first year of Humira erosion has left it more confident in the company, stating that AbbVie assets like Skyrizi and Rinvoq should continue growing faster than consensus expectations. With recent ImmunoGen and Cerevel deals, they have expanded their revenue growth potential and now have multiple high-impact catalysts to drive shares higher. AbbVie currently has 15 analyst ratings, coming in as a strong buy with 12 buys and 3 holds. And the average price target comes in at $188, implying an upside potential of over 9% from current prices. Looking at our ratings here down below, you can see that high end here at $214 from BMO, implying an upside potential of over 24%. On the low end, we do have a hold here from Bank of America at $172, which would be a slight downside of 0.2%. Second on our list today is Shell. They trade under the ticker SHEL, currently priced at about $72 per share. They've climbed nearly 19% over the past year, and in the last 3 months are fairly flat, up 0.75%. Shell is an international energy and petrochemical company. They explore, produce, refine, and market oil and natural gas, and manufacture and market different chemicals. Their technology and innovation efforts include digitalization to improve efficiency and safety, and carbon capture and storage to reduce emissions. They also invest in power, including renewable sources such as wind and solar, and in EV charging and low-carbon fuels for transport. With dividend payments dating back over a decade, Shell's goal is to grow their dividend by about 4% every year, and they target distributions of 30 to 40% of their cash flow from operations. Their current quarterly dividend comes in at 69 cents per share for a dividend yield of 3.69% and a payout ratio just shy of 34%. Their Q2 earnings report is due out in a couple of weeks at the start of August and does follow a big earnings beat in their Q1. Analysts are anticipating earnings per share of $1.89 for their Q2, which would be a nearly 40% increase over last year. This follows their Q1, where they reported earnings per share of $2.40, beating estimates by 47 cents. The company reported cash flow from operations of $13.3 billion and commenced a $3.5 billion share buyback program. Shell does currently have 6 analyst ratings, coming in as a strong buy with 5 buys and 1 hold. And the average price target comes in at $84.30 for an upside potential of over 16%. Looking at those ratings down below, we do have a couple that recently slightly decreased their price target by a few dollars. Our high-end price target coming in at 90, which would be an upside of over 24%, and our low-end price target is here back in May at $74 for an upside of 2.7%. If you've made it to our third stock today, then this is your friendly reminder to make sure you hit that thumbs up button. Third on the list is a very well-known dividend company with Coca-Cola. They trade under the ticker KO, currently priced at $65.30. In the past year, they've climbed nearly 8%, and in the last 3 months have grown 8.7%. Coca-Cola, of course, is a beverage behemoth known around the globe. The company was started 137 years ago and has now grown to have a beverage portfolio of more than 200 brands, from soft drinks and waters to coffees and teas. Coca-Cola is another dividend king and has 62 years of consecutive payments and dividend increases. Their current quarterly dividend is 48 cents per share for a dividend yield of 2.9% and a payout ratio at 69%. Their Q2 earnings report is coming out right away on Tuesday, July 23rd, and does follow an earnings beat from their first quarter. Analysts are estimating Q2 earnings per share of 81 cents, which would be a slight increase over last year's. This follows their Q1 earnings of 72 cents, beating estimates by 2 cents per share, and revenues that came in at $11.3 billion, growing 3%. A few weeks ago, we had an analyst from Citi who increased their price target on the Coca-Cola stock. They reiterated their buy rating, saying that the company's all-weather strategy, tested and proven in challenging external conditions, has been further strengthened by operational changes such as the network model, improved alignment with bottlers, and revenue growth management capabilities. These strategic overhauls have led to a notable increase in top-line growth compared to historical levels. With 16 current analyst ratings, the Coca-Cola stock comes in as a strong buy with 14 buy ratings and 2 holds. And the average price target comes in at $69.50 for an upside potential of 6.45%. Looking at those ratings down below, on the low end we have a couple price targets at $65, which would be a slight downside, less than 0.5%, while our high-end price target comes in from UBS at $74 for an upside of over 13%. So that is a quick look at 3 strong buy mega cap dividend stocks. Let me know your thoughts on these companies in the comments down below. You guys know I always love hearing from you. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're sticking to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.